Morning, good morning, good morning. How's everyone today? How is everyone today? If you can hear me, please type a Y. If you cannot hear me, please type an N. If you can hear me, please type a Y. If you cannot hear me, please type an N. Good morning. Morning. Morning, Karabo. Morning, Rhino. Morning, Chris. How's everyone on this morning? Yeah? I hope everyone is good. I hope everyone is good. My name is Gopolang, Gopolang, and I will be assisting you with the webinar workshop for today, where we are going to be looking at our technical analysis. Now, from this particular technical analysis here, I would like us to basically focus on looking at a plain chart. Looking at a plain chart, analyzing a plain chart. Today I'm not going to be looking at any indicators on the basis of the fact that, as we all know, indicators are basically lagging what is supposed to happen on the chart. So the decision making which happens on the chart, we need to be in a position to read it and analyze it so that we can be in a position to say, if I was to analyze a plain chart and also use an indicator, does the indicator actually confirm what I have already analyzed from my plain chart? So today we are going to be focusing on looking at analyzing a plain chart, right? So I'm going to start with explaining what technical analysis is and what is it with respect to us. For us, how good is technical analysis for us? How bad is it for us? If there is anything bad related to it. So that is what I'm going to be focusing on today. Now, the very first thing is that we should always know is in the markets we have two kinds of analysis. We have a fundamental analysis and also technical analysis. Now, fundamental analysis is basically looking at the different types of news which are there, news which can possibly affect the markets, news that cannot actually affect the market. Now, you need to be in a position to differentiate which news are going to be affecting you in the market and which news are not going to be affecting you in the market. So, briefly, briefly, I'm going to highlight different channels on television and the different website which you can use in order for you to gain access towards the different fundamentals that are going to be there. Now, as you all know, at some point this month, I'm not sure of the date as yet, Donald Trump is going to be meeting with Kim Jong-un. So we may possibly see a very volatile market going forward on the basis of that. Now, those that have been in the market for quite some time now, you are already aware that every single time Donald Trump goes into the news, the market always react either in a good way or in a bad way. Most people always see it as a disadvantage lately whenever Donald Trump tweets something, but it's not actually a bad thing because if you know how to read your charts on the other hand, then you will obviously be in a position to say, but whether Donald Trump says something good or whether Donald Trump says something bad, it's actually going to be good for the market because the market have already decided upon what risk they want to take. Are they on a buy side or are they on the sell side? So you always need to be very careful when it comes to fundamentals on the basis of the fact that the market always makes a decision. Now, imagine, for example, that you have already committed yourself into a short position in the market and you have committed funds, let's say, around about 5 billion rands. Now, If you have already committed 5 billion rands into going into a short position, are you telling me that even if Donald Trump can come into the news and say something good, you would just let yourself lose the 5 billion rand on the basis of the fact that he has just said something good? So, any suggestions? Would you let Donald Trump mess up your day, whereas you've already committed 5 billion rands into a position to go short? Who would just let 5 billion rand just go away like that simply because Donald Trump said something good and you've already committed yourself into a bad position? Definitely not. Definitely not. Yes. Yes, yes. That's something that when it comes to fundamentals, you always need to be aware of, because the market already decides in which position they are committing their funds. Now, if we have already committed our funds into a short position, then no fundamental can actually reverse the market as quickly as that, so that the overall market will be losing money. Instead, the market would rather use the fundamentals in order for the fundamentals to actually go in the direction of where the funds have been committed in the first place. And then after us making a profit going short on our 5 billion, then after we can close our positions and open new buy positions for whatever Donald Trump did say, which was good. Now, that is something that you can always establish from a plain chart. And the moment you start to add an indicator, the indicator is going to be confirming exactly that. Because what we are interpreting in the market is basically what are people's commitments. Are people committed in buy positions, or are people committed in sell positions? If people are committed in buy positions, then the amount of money which is committed in buy positions weighs heavily as opposed to the actual fundamental which is there. And another thing that you always need to take into consideration with respect to the fundamentals is that fundamentals are always long term news that are going to get us to decide on whether we should be buying a particular stock or whether we should be selling a particular stock. So a fundamental reaction is not something that we are going to be reacting now. Simply because a company has just released good news does not mean that we need to buy the company, because I've already committed my money into a sell position, right? But obviously, all of this is not on the basis of the small players that are in the market. It is on the basis of the big players which are already there in the market. Now, our sole purpose in the market is to try and find out through technical analysis exactly where are the big players committed. Are the big players committed into a buy position, or are the big players committed into a sell position? So if we can basically establish that first and foremost, then we can actually see how possible are the fundamentals that are going to come out with respect to different companies. Are those fundamentals going to change the direction, or are those fundamentals going to continue the direction of what the overall funds of the market have already been committed towards? Now, that is just a preview of how I would basically define fundamentals and how we basically use fundamentals in the market overall. Now, technical analysis is basically the picture of the different decisions that have been made on the chart. Now, again, it is not the small players that we are seeing their reflection from technical analysis. It is the big players that we are seeing through technical analysis, because it is obviously the big players that can easily move the share price because they are committing way more funds than the small players. So from them committing huge amounts of capital, then we need to understand exactly, did they commit their overall capital into a buy position, or did they commit their capital into a sell position? Now, if we can understand that by reading a chart, then we are in a better position to actually not go the wrong way of the market, or not be on the wrong side of the market, but to consistently be on the right side of the market. There will be situations in which you will be placing a trade and your trade hits a stop loss, but it should not be a bad thing in a sense that that should always happen once every after, let's say, 10 trades, for example, or it should easily happen twice with every 10 trades that are there. It should never be, it needs to be happening 5 times, whereas you've only made money 5 times. So I'm a person that do not believe in placing 10 trades and winning 5 and losing 5. I should be placing trades, winning 9 and losing 1. But the one that I lose, it must never be a loss that I missed or I analyzed the graph and the share hit my stop loss going the other way. I should be in a position to say that if the trade does hit my stop loss, at least at the end of the day, I did manage to predict the direction right. And all of that, we can only see them through technical analysis. Now, the very first thing that I'm going to start with respect to technical analysis, let me remove certain things here. I'm going to put the company CFR. I'm on the 1-day chart of the company CFR. Now, on CFR, there are certain things. I'm going to remove certain things on my chart here. Going to remove certain things on my chart, and please take note of what I am removing because I'm going to put them back yet again, and I'm going to explain as to why do I have those particular lines that are supposed to be there on my graph. Now, this is one indicator that each and every single individual needs to be in a position of, right? Now, as you can see, my chart is plain. It does not have any lines. What I can see from my chart is a straight movement of the share price of the company CFR. Now, from this particular company here, now it is always very important to make sense that if you have a chart like this, for example, if you have a chart like this, let it load up. My chart load up. I hope it does load up. Now, if you have a plain chart and you just have a movement, what you can see from that movement is that you have a particular trend of a share, but the most difficult part is you are not in a position to separate which movement was from which particular month, which movement was from which particular day, right? So it is always important for us as short-term speculators of the market to always be in a position to interpret this movement happened on this particular month. This particular movement here happened on this particular month. Now, if you are not in a position to do that, then it becomes difficult for you to actually create things like trade ideas, because a trade idea now for us as short-term speculators requires us to actually be in a position that if I have a movement of a share like this, I'm in a position to separate it to say, okay, this movement from this particular candle up until this particular candle here is a movement that basically took place in January, and this particular portion here is a movement that happened between the month of April or the month of March, for example. Now, how do you get that particular indicator? Now, at the bottom of my chart, it is written dates, right? On the right hand side, I don't know which one is which. I know it's the x-axis and the y-axis. So at the bottom, there are dates that are written there. If you right click on those dates and you go to show time periods separators, as you can see, it says show days separator, show weeks separator, show months separator, show years separator, and all of them are not ticked. Now, ideally, you would prefer to tick all of this. The reason being, if I do tick them, then the lines that are going to appear on my graph are going to be separating different movements. Now, I've just ticked everything there. Let me go to a full screen. As you can see now, from my full screen, I have lines which are now separating my different movements for different months. Now, these green lines that you see here at the bottom, it's written M and it's written the month February. So between the month of February and the next green line, which shows me the month of March, before it, I can see the month of the movement of the share price of CFR. So now, after seeing these different separations, I'm in a better position to say if I'm going to be trading CFR for the month of June, what really happened or what was the movement for the month of May? Because you cannot be placing trades in June assuming that we are buying or assuming that we are selling without knowing what happened on the previous month or what happened over the past 3 months, right? Now, so these lines here, please, if you do not have them on your chart, please make sure that you put them in. What you do is you go down towards your date, you right click, and then you go to show time period separators, and you take all of those time periods that you see there. Now, let us start off our technical analysis with a candlestick, right? We will start our study of technical analysis today with a candlestick. So let me go to a 1 year chart. I want to add a 1 year chart here. If I can add a 1 year chart and let us focus on last year's candle, for example. So this is a 1 year chart, as you can see here. Now, from a 1 year chart, now, a candlestick is basically an indicator or an indicator which is supposed to show us the movement of price. Is price going up or is price coming down? Because as you well know, we only have two decisions to make in the markets. One of the decisions that we have to make is to buy. One other decision that we have to make is to sell. Now, for us to be in a position to make that kind of decision of either buying or selling, you need to be in a position to understand a candlestick and the different prices which are located within the candlestick itself. Now, I'm going to be focusing on this year's candle for the share price of CFR, right? I'm going to be focusing on this year's candle and I'm going to be identifying the different areas that you see from a candlestick. Now, the very first thing that you can take note of with regards to a candlestick is one. A candlestick is or has different prices. And when a candlestick has different prices or different sections, what you have to take note is what are those different sections mean to you, or what do they mean to you, the different sections of a candlestick. Now, as you can see, right now I'm busy drawing arrows onto my candlestick for this year. I'm busy drawing arrows, and from these arrows, I'm going to be typing or attaching the names of what is supposed to be seen with respect to this particular candlestick here. Now, from this particular candlestick here, the arrow here at the top and the arrow here at the bottom are basically highlighting to us what are known as spikes, right? Some of us call them spikes, some of us call them wicks, but I'm just going to leave it as spikes. Some call them pins, right? We have different names. Some call them necks and tails, but I prefer the name spike. Now we have a spike at the top, and then we have a spike at the bottom, right? We have a spike at the top, and we also have a spike at the bottom. Now, what is the purpose of a spike? Now I'm going to draw another line here. I'm gonna draw another line there, right? This line here now is basically highlighting my two spikes there, the spike at the top and the spike at the bottom. Now, what is the main purpose of a spike? The main purpose of the spike is to basically show you rejection, right? It is to basically show you rejection, what is known as rejection, right? So I will write rejection spike there, and then I will write another rejection spike there. uh, Rejection, right? So I have rejection, and then I have another rejection that you see there. Now, these rejections, what do they mean? Why is there a rejection that takes place there? Now, this rejection is there on the basis of the fact that the upper spike, or the spike that you see at the top, is basically showing you the highest price that has been reached during the trading session of a particular time frame. Now, since I'm on the 1 year chart of CFR, the top spike that you see there basically shows me the highest price that was reached, and from this particular highest price which was reached, there was a rejection. Hence, at the very end, you have what is known as a spike. But now, since it was the highest price reached, basically, who rejected who, right? Who rejected who at this particular area there? Now, it is for this high price to be reached, obviously buyers have to be pushing the price up. For a higher price to be reached, buyers need to be buying so that the price can go up. Now, if the price is going to be going up, that means that for that spike to occur there, the sellers now, on the other hand, the seller has to reject the buyer from further pushing the price up, right? So whenever you see an upper spike, there, just know that it is the seller that rejected the buyer from further pushing the price up. So if the highest price, so for the highest price for this particular candle of CFR this year was 123 Rand and 95 cents. So the moment we reached that particular price of 123 Rand and 95 cents, sellers started to come in and they pushed the price down. So if the sellers push the price down, that means that now you are left with this particular spike there. And a spike is basically a signal for us in the market. But for now, I'm not going to discuss the signal as yet. We will discuss the signal as soon as we go into analyzing our chart for CFR. Now, the bottom spike now in this particular instance shows us the lowest price which has been reached. So it is the lowest price which was reached. That means that at some point during this year's candle for CFR, sellers were pushing the price down. And the lowest price that we have reached for this year on CFR was 101 Rand and 51 cents. Now, why is there a spike towards the location of the lowest price that has been reached this year? This basically simply means that for that spike to occur, it is the buyer that rejected, the buyer rejects the seller from further pushing the share price down. So whenever you see the spike facing at the bottom, that simply means that it is the seller that, or it is the seller that got rejected from further pushing the share price down. Buyers started to come in and they pushed the share price up. They pushed it a bit higher up. Now, there is this particular body, or there's this particular figure which is there in the middle, and this figure in the middle there is known as the body of a candlestick. The body of a candlestick, and the body of a candlestick basically tells us that it is where the overall activity is located. That is where our activity for the trading session of this particular candle is at. So the body, it is basically the activity of the candlestick, where the battle between both the buyers and the sellers is actually occurring, and the ones that are basically more stronger than the others, basically you will start to see the body pushing higher. If sellers are more stronger than the buyers, then you will start to see that the body is actually coming down, or your share price is coming down. Now there is something, or is the sound cutting? Can everyone hear me? Can everyone hear me? Okay, the sound's cut. Is the sound fine now? Is the sound fine? Okay, I will try to fix my system while I'll continue with the lesson now. So, with regards to the body, so far with respect to the candlestick, there are two prices that I have already identified with respect to the candlestick, and one is the highest price which has been reached, and that highest price can always be identified by a spike at the top, which a spike at the top, again, it is a symbol that sellers rejected buyers from continuing to push the price up. And then the other price that we've just mentioned is the lowest price reached, which is basically identifying to us that from that lowest price reached, the spike which occurred there simply tells us that the buyers rejected the sellers from further pushing the share price down. Now, within the candlestick itself, there are two, or within the body of the candlestick, there are two other prices which are located there. Now, these two particular prices here is what get most people. So I will do this. Let me just do this, and let me move my arrow there, and I'll do that. These particular prizes there are one of the most important, but they always get a lot of people confused, in a sense that they are located on the edges of the body. And if they are located on the edges of the body, a lot of people cannot see them. Even me, I cannot see those two particular prizes, but there is something which is interpreted in the wrong way, which is supposed to show you exactly what these prices are, right? So they are located on the edges of the body, but a lot of people tend to get them confused. A lot of people tend to get them confused there. So please do not worry about the current candle that my arrows are currently located on, right? Please do not worry about that candle. I'm explaining the candlestick that I have enclosed with my blue lines there. Now, there are two prices that you find on the activity of the candle, and those two prices that are located on the edges of the body there is basically the opening price and the closing price of a candlestick, right? We have the opening price and then we have a closing price of a candlestick. Now, what does this mean? That simply means that if I open a 1-year chart and I was to look at a candlestick, that means that on the beginning of the year, or from the beginning of the year, a candlestick is going to open. But now when it opens, there is no highest price reached, there's no lowest price reached, there's no spike at the top, no spike at the bottom, there isn't even a body, because activity is now beginning to start. Now, if that activity begins to start, then we need to be having an opening price for the year, and at the end of the year, when activity stops and we do not have any more trading, then activity, or the candlestick itself, needs to have a closing price. Now, in this particular instance here, now these two prices, because now they are located on the edges of the activity, or on the edges of the body, they are hard for us to see. So for us to be in a position to say, okay, with respect to this particular candle here, the opening price was located there and the closing price was located there, we use the colors that we have for our candlestick. So the colors that we have for our candlestick are basically meant to show us exactly where is the opening price located, where is the closing price located, so that I can know, from knowing where the opening and where the closing are, I can be in a position to tell you that what was the overall share price movement with respect to that particular candle there. Did the share price go up or did the share price come down? A lot of people tend to make a mistake of assuming that the moment I see a green candlestick means buy, or a red candlestick means sell. That is a wrong kind of analysis. Green does not mean buy, red does not mean sell. Green simply means that the closing price, as I'm going to identify right now, this green candle here basically tells me that the current closing price of the share price of CFR is higher. So the arrow there at the top shows me the current closing price of CFR, and the arrow there at the bottom for this particular candle that I have enclosed shows me the opening price. So it's the opening price of CFR. Right, so opening price of CFR. So when I'm looking at this year's candle, after identifying all of these candles, I can see that this candle, the color is green, and from the color being green, what it basically tells me is the closing price is higher than the opening price, right? And if the closing price is higher than the opening price, that means that the overall share price movement is going up, or the share price is actually increasing. It's not decreasing. That means that if now I have a red candlestick, the red color for my candlestick basically tells me that the opening price is higher than the closing price in value, meaning that the overall share price movement during that red candlestick there, the share price was coming down. Are there any questions with respect to candlesticks? Are there any questions with respect to candlesticks? Did I miss something, or is there something which you require an understanding on? Okay. Okay, majority are understanding. So I have just identified the candlestick. Okay, the tails or the spikes or the wicks or the pins, whatever name that you would prefer to use it, basically tells us that we have a rejection. So an upper tail or an upper spike basically tells me or shows me the highest price reached. Now from that highest price reached, for that spike to be there, it simply means that the seller rejected the buyer from continuing to push the price up. The seller came in to push the price down. The spike at the bottom shows us the lowest price reached, and from showing us the lowest price reached, what it basically tells us is the buyer rejected the seller from further pushing the share price down. The buyer started to push the share price up. So you can put it in more practical terms to say that the spikes are basically a trail of where the market has been before. It does not mean that the market is currently there. And again, it does not mean that at the tails or at the spikes, there were less buyers and there were less sellers. Please, that is not the right interpretation. The spike is basically showing you that at some point, trading was occurring where the spike is actually located. It does not mean that there were less buyers or less sellers, right? And the bottom spike, it does not mean that there were less buyers or less sellers. It simply tells us that at some point the activity of buying and selling was actually occurring at the low. Hence, we interpret it as sellers were busy pushing the price down, and then buyers came in at a lower price. They started to buy those contracts, and they started to push the share price even higher. So the body itself is where we see where exactly is the current activity, and the prices which are located on the body, or the color of the body itself, shows us that on the current activity, price is indeed going up because the closing price is higher than the opening price. And how do I see that? I see that from the color of the candlestick, which is green. If the color of the candlestick was red, then I would be saying that the opening price is higher in price than the closing price on the basis of the color of the candlestick. So that is it from the candlesticks. Now let us go into the trends, right? Let us move into the second part, which is trends. Now there are three kinds of trends in the market. There is what is known as a bias trend or a bullish trend. There is what is known as a seller's trend or a bearish trend, and there's also another trend which is a sideways trend. No, 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 no. If your stop loss is below the bottom spike, you will still sell only if your position is a buy. If your position is a buy, then if your stop loss is below the spike, then you will be selling those shares once we hit your stop loss. So let's continue with the trends. There are three kinds of trends in the market: the buyer's trend or bullish trend, seller's trend or bearish trend, and the third trend, which is a sideways trend. Now, from this sideways trend, let me go into a different company now. Let's just say Remgro. I'll pick the share price of Remgro. Now on Remgro, I'm going to go into a shorter time frame. I'm going to switch Remgro into the 1-day chart. I've just switched Remgro onto the 1-day chart here. Let me increase the history of the chart. So a trend of a share has two particular areas that we always need to take note of, that we always need to take into consideration. And these two particular areas are support and resistance. Now, from the definition, an area of support is an area at lower prices where a share has a possibility of changing direction. I always take note of how I basically explain that definition. An area of support is an area at lower prices where there is a possibility of a share changing direction. Now, the word possibility there is very crucial and very important, in a sense that if there is a possibility, that means we may change direction, we may not change direction. So you must never say that an area of support is a solid area in which I will be deciding to buy. Somewhere within the very same area of support, a sell opportunity can always come in, but you always need to be in a position to say, if a sell opportunity comes in, what exactly must I see in order for me to say, okay, we went below support? That means that I'm now going to be prepared to sell this particular share here. Now, an area of resistance is defined as an area at higher prices where a share has a possibility of changing direction. It does not mean that in an area of resistance we are going to be changing direction. It is a possibility that we may. That means that there is still the other side that we may not, and the share price can still continue going even higher. So in that particular instant, all trends, bullish trend, bearish trend, and a sideways trend, have those two particular areas, an area of support and an area of resistance, because an area of support and an area of resistance are the two areas which define the character of the trend itself. So you would never have an area of support, you would never have an area of no, you would never have a bullish trend, a bearish trend, or a sideways trend without defining the character of the supports which are there and the resistances which are there. So it is the area of support and resistance which defines the character of the trend. So now, if I was to go into the share price of Remgro at this particular stage, now I'm going to be using my monthly movements, right? I'm going to be using my monthly movements to basically identify what trend is my current share basically trading in. Now I'm going to go into the beginning of Remgro's 2018 movement, right? I'm going to be looking at Remgro for the month or for the year of 2018 and try to establish exactly what sorts of trends has Remgro been involved in when it comes to the movement of its price. So where do we start? I'm going to start first with the month of January 2018. As you can see, there's a yellow line there, or is it brown? That color. And at the bottom, it is written Y, which is year, and next to it, it is written 2018. That means that the beginning of 2018 started right at that line there. Now, what am I doing here? What am I going to do here? I'm going to be looking at this movement of this month, January. Now, from the month of January, I'm going to be drawing a line. I'm going to draw a line at the highest point, or at the highest point which was reached for the month of January. Now, as you can see, the top line which I've just drawn now, the top line which I've just drawn now, I drew it on the spike, the longest spike which was basically reached. This was the highest price which was reached on the movement of Remgro for the month of January. Now, what was the lowest price that was reached? I'm going to go into the lowest price. There is no spike below where I have just drawn my line now. So this is my lowest price. So the line at the bottom is my lowest price for the month of January on Remgro. And then the line at the top is my highest price, which was reached for the month of January on the share price of Remgro. Now, looking at this alone, if my top line is the highest price reached, that means in January, the top line that I see there is the area of resistance for the beginning of this year, month January, for Remgro. It will be resistance for which month? It will be resistance for the month of February now, right? So it is the highest point, it is the lowest point, it is my resistance, and the bottom line there will be my support. The bottom line is going to be my support. So now the month of January, I have the top line being my resistance, I have the bottom line being my support. But now the question would be, why is it resistance? Why is it support? It is the resistance, that highest point in January, for the next coming month. It is not resistance for the month before January, but it is resistance for the coming month of February. And this particular low, which is support for my month of January. It is going to be support for the month of February. It is not support for the month of December. It is support for the month of February. Now, let us see exactly what happened on the month of February. As you can see, this is the month of February here. Uh, let's do this. I'm going to enclose the month of February for you. I'm going to enclose the month of February in black lines. So this is one black line there. Another black line. There you have it. So in between the black lines, that is the month of February's movement, and before it our support and our resistance were basically January's low, which was reached, and January's high, which was reached. But now, as you can see, what really happened with this particular share here, as you can see, in February, according to the definition of resistance, resistance is an area at higher prices where we have a possibility of changing direction. But you see that the month of February never went above the resistance of January. Instead, it started to change direction right at that area of resistance there. But when it comes to support, as you can see, February did break the previous month's support, or the previous month's lowest price went below, but it did not continue going down. Instead, it went back above our area of support. Now, what you can do is, I will draw a line on the month of February's low here. Now, I'm going to draw a line. I'm going to draw a line. Let me give it the color red. Now, the line which has the color red there, right, which has a range of between 215 and 60 cents and 226 rand and 20 cents for the low of January. This particular, I have now a range. This particular range between these 2 months here, this particular range there is the one between these 2 months that you can say going forward. This particular range there is going to be an area of support, or it is going to be an area of resistance, right? So support and resistance is not necessarily one line. It is sometimes a range. Now remember how we define it, an area. So if I'm saying an area, that means it can be a range of prices. Now if it's a range of price, that basically means that within that range, that particular range there is going to be your trading range, either as support or either as resistance. Now we're going to continue analyzing this share within this very same range. As you can see, this range was support, which was established in February, January. If you go to the month of March, the share came down within the range and then changed direction to go back above the range, even though it never reached the resistance of January. And as you can see now, the share itself for the month of May managed to come down. The share itself managed to come down below our range, right? The share managed to come down below our range there, as you can see from my arrow there. So what does it mean? That simply means that now our share has just broken support, which is our range. If our share has just broken support, which is our range, what needs to happen before I can decide selling the share? Because now the possibility of the share changing direction on the month of May has failed. Now we are looking at the possibility where the share actually managed to pass through our area of support. What needs to happen? That means we have a possibility of a short position which can be open. Now, if that short position can be open, what must you wait for? for you to be in a position to confirm that I can sell this share, you need to first wait for the share to go back within the range. And if the share does go back within the range, question is it going to go above, or is it going to go higher than the range, or is it going to change direction within the range? If the share changes direction to start giving you signals for a sell within the range, then you can safely sell your share from within that range to go even lower. Right? Now, is there any question on how I actually established the area of support and the area of resistance for the share price of Remgro? Are there any questions? So you understand, right? So an area of support and an area of resistance is always a trading range, right? It is always a trading range for a area of lower prices or for higher prices. Now let's go to another share. Any shares which you would like to analyze so that we can continue? DSY, right? DSY. DSY. I'm gonna go into DSY. So DSY, I'm gonna do the very same thing as well. With Discovery, I'm going to do the same thing that I did with the other share. Now I'm gonna start first with the high that was established in January. There I have it. I have the high in January, and then I have the low here in Jan, right? I have the high, which is the top blue line for January, and then I have the low for January, which is the bottom blue line. If I was to go to February, on the other hand, now February has a new low, which is currently below. This new low, which is currently below, as you can see, it creates a trading range for us. So February basically creates a trading range for us to say that, okay, our trading range is basically going to be giving us an area of support, right? So now between January and February, we have a range here between 153 and 75 going towards 167 and 42. So this particular trading range here is basically a range of support. Now, if this particular area here is a range of support, our high there, which is our high for January, and it is resistance. As you can see, this particular high was increased on the month of March. Now draw a high there, right? I'll give it a red color. Let me give this one here a red color as well. Right. So as you can see at the top, the month of March combined with the month of January has just given us a range of resistance, and the month of January and the month of Feb has just given us another range itself. So that means that the share currently, as you can see, failed to break down below our bottom lowest point, which was established in February. So if our share has not broken below, we can never start to think of selling this share going long term. Instead, we may be thinking of buying this share within this range with the expectation that it will go higher to reach that particular range of 187 going towards 193 of our range of resistance. And if this is the case now, that simply means that our share going long term is basically moving sideways between the top range and the bottom range. Our share is neither trending up, it's neither trending down, going long term. It is basically moving in between the bigger range or the highest price of 193 going towards the lowest price of 153, and it's basically long term moving sideways. It is not moving in a bullish direction. So let's see there. So this is just from the lines that I've just drawn. As you can see, this is just a big sideways range that we have there. It's a big sideways range that you can see there. So this big sideways range that you can see here is basically a big sideways trend, right? And if it's a big sideways trend, can you make money out of your big sideways trend? Yes, you can make money out of your big sideways trend, because the ranges between support and resistance are actually big enough for you to trade and get a risk and reward ratio of 1:2. Okay, the charts that you have to use to look at support and resistance. Remember, an area of support and an area of resistance, it is always stronger if you are looking at a larger time frame. Now, each and every single time frame is dependent on what kind of trader you are. So if I am a short-term trader and I prefer analyzing the 1 day 1 hour chart so that my trade lasts for a single day, then my area of support and resistance has to be drawn for my bigger time frame, which is the 1 day chart. If I want to analyze 1 month 1 day, that means my support and resistance areas have to come from the 1 month chart, because it is the bigger time frame. So obviously, from analyzing support and resistance, you always need to be using a bigger time frame to actually see this is an area of support, this is an area of resistance. So if this particular share here has a bigger range, right, currently for this year, for our area of support and resistance, let's have a look at what happened last year. Was this share last year trending up, or was this share last year trending down? Now I'm going to draw the highest point, which was established last year in January. No, no. The look, the two lines that the blue lines that you see here. Remember, a line is not a representation of an area, or it's not, or what this line shows me one price 167 rand and 44 cent. This bottom blue line. This line here was the low which was established in the month of January. Currently, we are going towards the month of June. That means on the month of June, going towards that particular month there, we have already established a trading range, which is our support area. Support is not a single price, it is an area, and every single time before the market can actually go into a specific trend, it needs to establish first and foremost an area of support, it needs to establish an area of resistance. So those two areas that are established is a trading range. It is not a single price. It's not 170 being an area of support. No, it has to be a trading range, whereby hence you can see sometimes candles with long spikes. Those candles with long spikes, those spikes are basically piercing through a particular range to say, within this particular range there, this is where the market is going to stop and we're going to change direction from there. So it is not the line, right? January is going to provide me with the first a high and the first low. On the coming months are going to now create the perfect range to say this particular range there is going to be our range for resistance, or is it going to be our range for support? Okay, we'll look at the time frames a bit later on. Let's continue with last year and how last year's trend was actually established. So the line that I'm going to draw now is last year's high for the month of January 2017. And okay, today we are not going to be looking at indicators. We are going to look at indicators on the next week. All right, so the bottom line there was the bottom black line was basically the month of January's low. So now I have a high for January, I have a low for January. So what really happened now with regards to the coming months? So let me increase the size of my charts here. So now if you can see here, the month of February last year, the month of February last year, the high of February and the low of February were contained within the high of January and the high and the low of January last year. So if January established a high, which is going to be our first resistance, and it established a low, which is going to be our first support, and February does not go higher or lower, then that simply means that February or January's high, January's low is actually our area of support and our area of resistance. But now what happened? As you can see, the month of March now increased the high. There was a high there of 137 and 83. It was the high of March last year. I'm going to give it the color red. So this red color here from last year is basically the high which was established in the month of March, which was higher. Now, since we have already established that January and February basically have the same high and the same low, and March now increased the high, established a new high. Now we have a range now. Now we have a range. So this range is going to be a range of resistance. Now this particular range of resistance, if you can have a look at it, April bounced on the January's highs, blue line, and went up to the red line. And then the month of May came back to the very same blue line, which is the high of January. And it started moving around that area without going towards the blue line. But this basic movement that you see here was basically an entry movement that is basically showing you that we are not going any lower. We are going to be using this particular trading range to actually continue buying the share. Now, what happened a bit later on in the month of July, as you can see, the month of July broke above now this range of hours which has been established, and now we are starting with a bullish trend. Now, as you can see, the month of August's high was there. Okay, let me delete this line that I'm about to draw here. I'm gonna shift this line. This blue line here, this is our next area of resistance, this particular high there. Why? Because we have just broken out of the range which was created for the year. So now by breaking out of the range which was established for the year, now we have an upward movement going towards the high, an upward movement going towards the high. There you have it. From this upward movement going towards the high, we came back for the test after breaking. We came back for the test after breaking, as you can see here. Where is it? There. We came back for the test after breaking. From coming back for a test after breaking, the share price went even higher, as you can see there. We went higher again. We went higher. From going higher, we now have this next area or this next high here, which has been established, which is a higher high. And then from there, we come back for a test of the previous high, which has just been broken. We come back there. The red line is the testing, the red arrow is the testing. And then from there, what happens? The share price goes up, it breaks even higher, and then it establishes a new high. So, what really took place here? What really took place here? From our initial support, which was established in January, which is our low, and it was never a range, to our high, which was established, and then March established now a range of resistance now. What happened? We looked at the month of May breaking out of the range. That means now by us breaking out of the range, this particular range now changes. It's no longer resistance. It needs to be tested as support. As you can see, the share came down here. When it came down, it got tested, but the share never went in within the range. Instead, it continued going higher. So if this particular range of ours is a low, then this high, which was reached before testing the range, was a higher high. So our resistance now became higher than the previous one. And then we broke above the very same high. Our resistance now became higher than the previous one. And then we broke again going towards December, established a high, and then now again our resistance became higher than the previous one. What you are looking at here based on this movement is what is known as a bullish trend. It is a bullish trend because every single time the share comes back for a test, it always finds its way to break the previous high and establish a new high, and then comes back to test the previous high, and it goes up even higher and then comes back. So you are looking at your lows, which are established as the testing areas, being higher than the previous ones, and your highs, which are newly established, being higher than the previous ones. So when you see a share moving in that particular movement there after breaking out of your range of support or resistance, then you have a trend that is currently forming, either being bullish. But for our share of discovery here last year, we are looking at the share moving in a upward trend. But for this year, on the other hand, our share is basically moving in a sideways trend from our previous explanation. So let's look at FSR. Let's look at FSR. Let me log back in. Software logged me out. Are there any questions so far? Are there any questions? No questions. So let's look at the share price of FSR for this year and see exactly. Yes, the same idea applies in all the other markets, right? So let's look at the share price of FSR for the current month, and let's see exactly what is currently happening. Now, this is the high of January this year. This is the low of January this year. We have not yet established the range, but now something interesting happened on the month of February, the high became bigger now. The month of February gave us a range between 72.13 and 77.22. So since the month of Feb increased our high to give us a range, if you were to look at your low of Feb right there, I'm going to draw the low of February here. This is the low of Feb there. So at the bottom, our low of January versus our low of Feb have just created a small range, as you can see there. Now this small range, as you can see, our share is busy bouncing off of this range here. It's bouncing off of this range. Why is it bouncing off of this range? It's simply because this particular range here has already been established this year as a range of support. This bigger range there at the top has already been established for this year as a range of resistance. So our share currently is still moving in between the range of support at the bottom and the range of resistance at the top. It has not broken either one of the two ranges for it to continue going even lower or for it to continue going even higher. So you can easily spot an opportunity to either buy or sell. So if the share was to do this, for example, so if the share was to move in this particular direction there, break below this very same range, that means that now you are looking at a share possibly forming the share possibly forming a new low. After forming a new low, the share will be going back up towards the area of the range there. When the share goes back up towards the area of the range and does not break above, then you will be seeing the share creating a movement of this nature here. If you start to see the share creating a movement of this nature there, that means now you have your lows being lower than the previous one, while your high at the very same time becomes lower than your previous one. That means now your share is beginning to start a downward trend. But if your share, on the other hand, does continue and goes towards the upper range of resistance now, that means that now you are looking at your share for this year still moving in a sideways trend. That means that now this is where the requirement of the fundamentals going long term is going to be needed in, or is going to be needed for shares like FSR as a company falling under the banking sector to actually break above the upper resistance and go higher, or you are going to have negative fundamentals which will force the share itself to break below our lowest range there, which is going to be our support, for it to start going into a downward trend for this year. So whenever you see a share moving in between a range of resistance and a range of support, that simply means that fundamentally we do not have anything in the market which is going to be getting the overall market to decide on putting more money into buying more of this share, or we do not have negative fundamentals which will be getting more investors taking their money out of the share price of the company so that the share price can start with its bearish trend. So this is what you see for the current year of FSR based on the range of resistance and the range of support itself. So let's look at another share, IMP, Impala. I will look at Impala. So if we can take a look at the share price of Impala, this was the high which was established in January this year. And this was the low which was established in January this year. Right? So from the high of January this year and the low of January this year. The question is, which particular range was established for this year? Now, I'm going to go to the low of February, which was this one here. Now, the low of Feb, as you can see, was lower than the previous low. So now we had a trading range here. This particular trading range here was either going to take the share price higher, or we were going to break the share coming down below. Now, as you can see now, our share broke down below our range and formed a new low. But from forming a new low, our share has never went back to go and test this particular range there. That means that at some point our share is going to change direction and go back towards this range here. Why must it do that? Because each and every single time you break an area of support or you break an area of resistance, you need to come back and test it. So we only had a movement of this share going lower. There it is. But we have never had a movement of this share going back towards the range to test it as an area of resistance before continuing to go lower. So if this is going to be the case, then you may be looking at the share price of Impala going higher. Once it gets to the range and it fails to go above the range, you may be looking at the overall trend of this share becoming bearish, because we're going to move from this range here and continuing to go even lower. So based on support and resistance and how you interpret the two particular support and resistance areas, then you can basically, or because the two areas are the ones that define the character of the trend itself, those two particular areas are one of the most important. Now you need to be always be in a position to identify, or to actually identify them correctly, because if you can identify them correctly, then you will be in a better position to see, okay, which trend is likely going to form from this particular range of support or from this particular range of resistance. Are there any questions so far? So, yes, for Impala currently, we do not have a confirmed trend for this year going forward as yet, because we are still owing this particular area here between 28.45 and 31.62 as our support range, which was established this year. So for now, we do not have any particular trend which has been established. We are still waiting to see if we do come towards this trading range here. Are we going to break above, or are we going to break below? If we break below, then we most definitely going to be starting with a downward trend again for Impala. Are there any questions? So it is clear so far. So if it is clear, I hope that you guys are going to practice this as much as possible so that it becomes more effective going towards your trading on the coming week. I hope that it's going to be effective on your trade on the next coming week. My name is Gopolang, Hopolang, and I would like for you guys to enjoy the rest of your weekend. I hope that I will be doing technical analysis with you guys again next week, Saturday, on our next workshop, whereby I will be bringing you other new things that you can always look at that are going to be helpful for your trading on the basis of technical analysis. So, thank you very much. Enjoy the next week of trading, and please do make money, and lots of it. That's what we want. We always want to make a profit. We do not want to lose money. The market is our industry and we should make sure that we take over. So please, I would like to thank you very much. So enjoy the rest of your weekend.